Morning, you're watching us here on Chartbusters. It's been an interesting morning, so to say. The Nifty opened with a gap up. We saw a bit of a sell-off, and now we are, inching again with towards that 17,100 mark, up almost 95 points. At the same time, the mid-cap index doing well. The Nifty Bank, however, seems to have come off the highs. I'm Manglam Malu, with me, Ekta Batra. Ekta.
Hi, Manglam. Yes, absolutely. There's some amount of retrieval. Remember that we did break those 5 days lows or losing streak for our market. So there is some amount of follow-on buying which is taking place today. At current reckoning, the Nifty on a week-to-date basis has lost less than 2% and the mid-caps have lost less than almost close to 2%, 1.7%. So let's see whether there is any kind of building on gains from these current levels, and we could probably reduce our losses on a week-to-date basis. But nonetheless, let's shift focus now. Kpit Technologies is the stock that is in focus. The stock is up around 5% today on the news of a tie-up with Honda to power their software-defined mobility roadmap till the year 2030. This comes on the heels of a software-defined vehicle space deal with Renault, which they signed in the month of November last year. We have with us Kishore Patil, who's the co-founder, managing director and CEO of Kpit Technologies, joining in to discuss all this and more. Mr. Patil, welcome to the show. Well, if you could just start by giving us a sense in terms of what the opportunity would be from Honda, and what does this mean for your entire SDV or software-defined mobility segment?
Yeah, so good afternoon. I think the only first thing is we have been working with Honda for last 6-7 years, and basically we have been involved in terms of working on projects and programs in different areas, including autonomous, etc., connected infotainment, etc. So here, when as we call, all the OEMs are moving towards software-defined vehicles, or as Honda calls it, software-defined mobility. This program was being undertaken by Honda. They thought that they would need a partner, kind of a long-term partner. And based on what we have worked with them together, there was a mutual trust, there was a mutual confidence and respect. I think based on that, this long-term relationship is formed. Basically, this is all encompassing kind of a partnership. So most of the all domains will be there, and basically we are in it to make software-defined mobility as a success for Honda. So to your point, what we have been saying is for most of the OEMs we work with, we are and we have a very significant programs, about 7 now, in terms of software-defined vehicles. These programs will pan out more towards a long-term relationship, multi-years engagement with them. And now the way approach Honda has taken is something makes more sense, because the OEMs would like to work with few chosen partners where we are very well positioned for 2 reasons. One is the expertise and the skill we bring to the table. Second, the long-term relationship we have with most of these OEMs.
Could you give us a sense of the kind of size of this deal? Just wanted to understand the scope of the work out here, the kind of margins that you will have. Renault, as we remember, was $100 million plus deal.
So there is no numbers attached to the deal. Okay. This is a long-term deal, but I may just, I have said that it's basically 2,000 people plus relationship by 2030. This year, we were expecting about 900 plus engagement. This includes some of the current engagements we have. We would not like to give specific details, but it is significantly higher than what today's engagement is naturally. I have also mentioned that this is the largest engagement we would be undertaking for software-defined mobility till we have signed.
Okay. How is Q4 looking or panning out? Sir, if you could just give us a sense, is there any kind of slowdown that you all are seeing? Is your guidance intact for FY23?
I would not like to say it. I have been saying it that the market is good, the opportunity is good. I think we are announcing significant partnerships. So I think there is nothing which has changed than what I have said last quarter, last year. So everything looks good. I think last quarter only I had mentioned that there will be two significant, as I said, mega engagements we will discuss. And this was a second one, which we have talked about. So I think everything is in line with what we have been talking about. I have also said that not necessarily every time we are going to announce these things, because these are our existing clients and many of them will also grow organically. So in line with that, I think we see a very positive business environment.
You said that, it is the largest SDM deal in terms of employees staffed. Could you, give us a ballpark? How big is it versus all the other deals that you've had? Is it 1.5 times, 2 times? Renault was about $100 million. I ask this again mainly because, you're talking about the size, it being the largest.
So I think it's a joint announcement in some certain way. We have made an announcement, Honda has made an announcement, and we have chosen to keep it like this. I think every 6 months we will take a review about how additional engagements may be required, and we will revise it. I think you can take a guess on that based on both number of engaging number of people. Also, I have also mentioned that this is the largest, so you can take a fair guess on this.
Let me try this another way. Mr. Patil. The last quarter, your total contract value was $272 million. Average has been close to around 140, 150. Last one was, of course, aided by the Renault deal as well. What kind of TCV are we expecting in the fourth quarter, including this one?
Let's wait for a month. We will announce it at the time of quarter. I think let's announce. I think the good part, what I wanted to say is there are 2-3 key takeaway from this. Number one, as I have been mentioning, that there is no slowdown in terms of the spend on software-defined vehicles. That is a point number one. Point number two, that these are long-term multi-years engagement. There will be a lot of concerns even last time when I spoke on CNBC, and some other analysts also had that kind of a concern whether this kind of spend will get deferred, whether that will be there, whether multi-year contracts will be there. So I think this basically put to rest at least in one significant way. That is something you can take away. And third, I have mentioned that this is the largest engagement we have. I think the rest, I would say that at the end of the year, we would of course talk about the quarter and the year going forward.
Okay. Mr. Patil, I just wanted your thoughts with regards to what's taking place in the IT industry on a larger scale as well. There have been leadership changes which have taken place at TCS as well as TechM. As an industry veteran, your quick comment.
No, I think this is a part of the process. It will continue, but I think overall the business requires, business is going through changes. I think there are significant opportunity. India is very well placed in terms of both expertise as well as skill. But the engagement models are changing. The technologies are becoming complex. I think from that perspective, there will be changes. I think everything is good actually from that perspective is what my feel is.
All right, Mr. Patil, thank you so much for joining in.
Thank you.
We tried our best to get some numbers out of you, but you're saying this is the biggest, so we'll hold you on to that, and at the same time await your fourth quarter performance as well to get some more granularity into this. For now, the street likes what you've done. The stock up 5%. Take a short break, come back. We have with us the management of NBCC, Pawan Kumar Gupta, who's the chairman and managing director, waiting by to discuss their recent order wins and the outlook going forward. Welcome back. As promised, let's welcome our next guest on the show. NBCC recently won work orders worth nearly 230 crores for the construction of a new campus at IIFT in Kakinada. We have with us Pawan Kumar Gupta, who's the Chairman and Managing Director of the company, joining in to discuss the recent order win and, more importantly, the outlook on the company's business going forward. Thanks a lot, Mr. Gupta, for joining in. This Kakinada is one of the recent ones. In fact, on March 6th, you won another order worth nearly 90 odd crores for an Asian construction company. Through this year, you won orders worth nearly 3,400 odd crores. Just wanted to understand how much more can you do in the remainder, the next 10-15 days of this financial year?
Yes, a very big order we are expected to win. It's the construction on the balance FAR of Amrapali. So that order, in case we are able to get that, may be worth rupees 7,000 to 8,000 crore. And another order is also in pipeline. It's the redevelopment of Government of India presses at Mayapuri and Nasik. Mayapuri in New Delhi and Nasik. That would be worth rupees 750 crore in case that comes up. And
so all of this in the next
that stage of discussion. The District Mineral Foundation, Jajpur in state of Odisha at the cost of rupees 300 crore.
And all of this likely to close in this fiscal itself, right? The next 10-13 days.
Yes, we are trying. We are likely to close in this financial year.
Right.
Okay. The last time we spoke, you said around 17,000 crores in terms of orders were being executed. Does that number still stand, Mr. Gupta? What is it now?
We are awarding more and more contracts, so that number is increasing. Right now, we have around 4,000 worth crore of tenders in pipeline at various stages of either they have been opened or they are likely to be opened shortly. So this number will increase drastically very shortly.
Okay. Can you give us more details of your Amrapali project? The last we know, around 50% was completed. Where do things stand currently? What is the completion timeline?
This project consists of approximately 46,000 houses. So 2 projects we have completed successfully. 9 projects are under final stages of completion. As far as the flats are concerned, we have completed around 8,200 new flats. And out of which 3,000 new flats have been handed over. These are apart from the flats which were earlier occupied or which were earlier in the final stages of finishing. These are the new flats that have been constructed, and out of that 3,000 have been handed over. We have done little more than 50% of the work till now, and we plan to finish this project by the end of 2024.
All right. By the end of 2024, Amrapali gets over by... Good. Mr. Gupta, just wanted some more numbers from you. Your last known order book was close to around 55,000 crores. You are saying that you are likely to get orders worth nearly 8,000 crores in the next 13 days. So assuming that goes through, you will end this year with an order book of almost 60,000 crores. Next year, how much will you execute in FY24? What kind of revenues and margins will you have?
Next year, we are keeping a target of around 9,000 crore for NMCC turnover target, 8,000 to 9,000 crore, depending on at what time these orders come. This year will be closing on around 6,500 crore. This is 15% more than the last year, our revenue, the gross turnover of NBCC. And next year will be making another 20-25% increase. That is the plan.
Okay. Sir, just a quick last question on a broader scale, FY24, as we go into it, as of now, you are saying that the tenders are quite positive and, in terms of the order inflow that and the execution rate. But going into FY24, do you see some headwinds probably impacting the company? We have some amount of, slowdowns, which is probably taking place globally at this point in time. The fear that the RBI might still hike rates based on what's taking place with regards to inflation. In that context,
as far as our business is concerned, I don't see any slowdown in the next financial year. In fact, there have been a number of positive developments. A few days back, we got all clearances from all statutory authorities regarding our Sarojini Nagar redevelopment project. Yesterday only, we got the clearance for Netaji Nagar project. So both these projects will be taking up in full steam very shortly. And as Amrapali is concerned, that is already in full steam. And if we get the new order, that will be another boost to the revenue. So I don't see any slowdown in financial year 24 in our business.
Right. I missed the margin number for 24. You said 8 to 9,000 crores is the revenue. Margins would be how much?
Margins will be, our PBT will be more than 500 crore definitely. It could be a little more than that.
All right. Thanks a lot, Mr. Gupta, for joining in, giving us all those details. 8 to 9,000 crores in terms of revenues for FY24. PBT of a little more than 500 odd crores, and expecting orders worth nearly 7 to 8,000 crores coming in the next 13 days or so. With that, we'll take a short break, come back, get you more on the markets and individual stocks.
Welcome back. Well, steady for the market, so let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins in now to talk about a stock that he's tracking very closely this morning.
Bharat Electronics, which corrected from rupees 115 in September last year to currently at around rupees 92 a share, provides a very good opportunity at 18 times its fiscal 24 estimated earnings and a dividend yield of close to 3%. Valuations are compelling, of course, considering strong earnings visibility, order book, pickup in execution. With an order book of close to 55,000 crore or close to 4 times its annual revenue, it has a strong revenue visibility. Many large projects post the COVID-led stage were delayed. In the first 9 months, if you look at the current fiscal, it backed orders of around 3,900 crore, which was far below its order inflow guidance of around 20,000 crore. However, it should be better as few large projects seems to be reaching the finalization stage. Thankfully, the business is improving. In December quarter, it delivered close to 12% growth in revenue on a year-on-year basis. Availability of electronics, vendors and imported products, along with, of course, the logistics and labor issues have eased, so that has supported higher execution. This momentum should continue. In the current year, it expects to achieve 15% growth in revenue with higher EBITDA margins. So overall, good earnings visibility, strong order book, and attractive valuation along with dividend yield of close to 3% should support the stock.
All right, Jitendra, thanks a lot for that. With that, we're completely out of time on this edition of Chartbusters, but you stay tuned to CNBC-TV18, the Nifty holding up with a gain of 74 points.